This topic is going to be about, do I need an LLC to invest in real estate? So what if I told you you might be hurting your future deals by not using an LLC, but you don't necessarily need one for your first few properties? So in this video, I'm going to talk about how I use an LLC and when I finally got around to getting one, because I didn't have one in the very beginning. So why even have an LLC or a similar entity? Since I'm familiar with limited partnerships and LLCs, I'll be talking more about that. But we'll kind of get into some other entity formations. And when I say formations, that's just creating it. And yes, you can do some of this online, but other times you're going to have to hire like either a real estate attorney or a CPA. So, but the reason that you would want to have an LLC is for simply asset protection. It limits your personal liability if someone is injured on a property or if there's a lawsuit or that kind of thing. So lenders often prefer individual borrowers for first property. So when we bought our first property, we just did it in our personal name. In fact, I bought like 3 properties before I actually got around to doing an LLC because I just didn't know, right? That never came up. I'm in Texas, so it may be different from if you're watching this from another state. So there's different laws and how the IRS treats different entities and what fees that you have to pay, not only to set them up, but to maintain them, and what protections these entities can afford, and they can vary from state to state. So here's what I'm saying. What works in Texas may not be the same in other states, so you want to check that. Now, who am I? Okay, why am I even talking about this? So, hey, my name is Nancy Wallace Lobbs, and I'm a real estate investor. And I founded Money Making Mamas with my daughter, Kelsey Lakes. So Kelsey's actually learning everything you're learning from me. So I'm doing these videos part for her and part for you. So we started a podcast and it's called Money Making Mamas. That's with an apostrophe, and we're on Apple, Spotify, all the places that you can find on YouTube, all the places that you find podcasts. I'm an author of the best-selling book, Winning Deals and Heels, and you can find that on Amazon. And our mission on Money Making Mamas is to help moms invest in real estate and make money. So if you've ever listened to Kelsey's story, she's a stay-at-home mom, had a corporate job, wanted to, stay at home, be a full-time mom. And so she came and said, hey, can I make a living, investing in real estate? So that's her journey. So my journey, so as I said before, I bought our first rental property back in the day, and it was in 2006, under our personal names in the beginning. It was very, very easy. Countrywide Home Loans was around. I mean, if you could breathe, you could get a loan, right? And so what I learned from attorneys and estate planners was why you needed asset protection versus tax benefits. And some of my other videos, I talk about the benefits of owning real estate investing. So now I'm going to be talking about the tax benefits and how your deductions can either be a pass-through or, how deductions work. So there are some common myths that you need multiple entities right away, or that LLCs protect you from every risk. So I'll be talking about Series LLC here in a minute, but just because you have the asset protection doesn't mean that you won't be sued. Can a LLC be pierced? Absolutely. I mean, they might, if you've been very negligent or committed fraud, yeah, that's not going to protect you. So the key questions you want to ask yourself to determine whether or not you need an LLC is, what is your risk exposure? A lot of times what people want to do is they just want to protect their personal savings, their home, that kind of thing. The number of properties that you own. So I had 3 properties before I even created an LLC, right? So to start investing, you don't have to have an LLC right away, or S Corp, or, limited partnership or anything like that. It doesn't stop you from investing. And then the type of financing. So some lenders, they don't want to deal with LLCs. You still have to go in there with your own personal, information, tax returns, that kind of thing. So in one of my other videos, I talk about lending and the types of lending that you can get. So, don't let that stop you, because eventually when you do have an LLC, like now I can get mortgages under my LLC entity, and there's a lot of benefits to that. And then what state you're in, because I don't know what, I only know Texas. So, and that's because I have a CPA and someone who helped me set these up. So I'm not an expert on what other states, not even my own state. I just know that this is what I need to protect myself. So do check for your own state jurisdiction. Now, with that being said, I want to have a disclaimer here because I'm in Texas. I'm a real estate investor, real estate broker, but I'm not an attorney. And so this is not meant to give you any kind of legal advice. It's based on my own personal experience with setting up entities. I'm also not a CPA, so I can, again, only give you what's worked for me and the deductions. When I talk about tax deductions and when I start talking about pass-through income, that's because it's worked through my LLC in the way I have my entity structured. And I'm definitely not a financial planner. Now, I'm a financial planner for myself because I invest in real estate and that's how I plan my finances, if you will. But, you know, to really see how one of these entities, what works for you, you have to consult with a professional to determine what's the best structure for your financial goals, your financial risk, and your net worth. Now, again, the purpose of setting up an entity, I'm calling them entities, so an LLC, and series LLC, a limited partnership, S Corp, I don't know, there are probably some more, is your main goal is to separate your personal assets from your real estate business liability. So when you think about it, it's kind of like commingling. You don't want to commingle your assets. So your personal home versus your rental properties kind of thing. Now, there might be more, so these are the ones that I'm familiar with and that usually work in real estate investing. So one is the limited, this is the most popular one with real estate investors, a limited, an LLC. It's the name a limited liability company, right? That's what it is. And it protects your personal assets like your home, your personal savings account from business debts and lawsuits arising from your rental properties, okay? In a lawsuit involving a tenant injury on your property, a well-maintained LLC would limit the legal claim to the assets held within the LLC, right? So hold on, I'll explain that in just a second. Protection is not absolute and does not cover personal negligence or fraud. So if a tenant gets in one of your single family homes or multifamily, if a tenant, let's say they fall down, that you knew that there were, or maybe you didn't know, but there were stairs that were wood and they're rotted, and the tenant steps through it, or somebody visits the property and they step through it, they break their leg, they go to the hospital. You could be on the hook for that because that was negligent, not making that repair, because wood rot just doesn't happen overnight, right? Another common issue is maybe the tenant slips and falls, from the shower. Now, they have to prove that you were negligent. So if water was leaking out of the floor, let's say out of the shower pan or something like that, but it had never been reported, just started happening. I mean, if it's something over, time, so the tenant does have to prove that it was absolute negligent and that it wasn't just something that you took care of. It's more something like a tripping hazard, like if the sidewalk isn't fixed, so some things like that. But I will tell you, if you have insurance, the proper insurance, that also helps you. It kind of goes hand in hand with your LLC, and I'm going to talk more about that in a minute. So the types of entities going on is there's also an S Corp. Now, I've never used an S Corp, and there's a whole bunch of things that go along with that, but it also provides liability protection, and it has more stringent administrative requirements than an LLC. So you have to have meetings, you have to track the meetings, you have to keep track of the business meetings. The corporation protects its shareholders, so you can have shareholders. I mean, there's S Corps that are just one or two people, but there's just the setup, and it costs more to have them too. So I've never explored that. There's also some taxing, like for the IRS. So when I met with my estate planner and my CPA, then the LLC, by far, I needed something simple and simple to report in terms of income, expenses, deductions. Now, there's also, you might have heard about this, series LLC. So what this is you set up one LLC. So let's call it Nancy's LLC. And then under Nancy's, so I have one, maybe two properties in that LLC. But then under the LLC, let's say I have Nancy's 1 LLC, Nancy's 2 LLC. And I have one property per LLC. So some investors do that. Now, when you do that, generally you need to have a separate bank account for each of those, some accounting, so there's a little bit more to managing series LLCs. And again, if somebody sues you, right, and they can determine that you're negligent, it doesn't matter how many LLCs you have. You can be sued. But again, if you back it up with an umbrella policy, you can prevent. And I can tell you, I've been doing this for almost 20 years. I've been sued a couple times, not for any injuries or anything like that. So if a tenant wants to sue you, they're just going to sue you. And there's just nothing you can do about that except protect yourself by either having an entity or proper insurance. What a series LLC does is it creates separate compartments, if you will, so that 1, 2, 3 for each property. And so a lawsuit against one property won't necessarily affect the assets of your other property unless it's just really, it's fraud involved, it's, landlord negligent, that kind of thing. So just know that that protection can be pierced if if you're truly at fault. Now let's talk a little bit about the differences and benefits, and I'm just going to compare an LLC with the S Corp because they're the two most common. So an LLC can be like what basically is called a pass-through entity. So I actually have multiple LLCs. They're pretty simple to set up. After I paid big bucks to have the first set up, I was like, oh, well, I could go do this, and I'm going to talk about that. Because you may partner with someone on, a flip or, owning a property together. So you might want to set up an LLC just to make it more formal, and also protect each other's assets, right? So profit and losses are passed directly to the member's personal tax returns. So on my LLCs, so I have one for different things that I do in real estate. So because I'm a real estate broker, I have an LLC for that. When I had a property management company, I had an LLC for that. For my investment properties, I have an LLC for that. So the way my taxes work is that my accountant I do a profit and loss sheet for each one of them, making it very simple. And they basically take any loss or profit and it carries over to my personal tax return. Okay, so that's considered pass through. With that, I avoid a double taxation of a traditional corporation that can happen with the S Corp. Now remember, I'm not a CPA, and so I can only give you what has been my experience. An LLC just offers greater simplicity and flexibility, right? Because you can open them, you can close them, you can add members to it. You have fewer corporate formalities, meaning that you can have meetings, you can, record them, and you can have like a notebook with your meeting notes. But, usually I just put notes down about whoever I'm in an LLC with, right? And for me, like I'm thinking one of my LLCs I have with my husband, one I have with my daughter, one I just have like a solo LLC. So you can, when you're setting them up, you can see that the membership of the LLC can be one person, two, there could be three people. And I don't have to have mandatory annual meetings and detailed record keeping. Now, I do keep detailed record keeping for the bookkeeping side of business, right? So the LLC is definitely the most popular choice for real estate investors. Now let's look at the considerations for each of them, right? So the LLC is flexible ownership, where the S Corp has stricter ownership requirements. I don't even know what they are because they were so strict I didn't want to go down that road. And the cost to set them up, so you can set them up for as little as $100. I found that it's about $400 to have it completely filed with the Secretary of State, get my EIN number and things like that here in Texas. And then there's higher initial setup cost for an S Corp because there's more complex filing requirements, and you have to kind of set up a certain way that the Internal Revenue Service requires. So on the LLC, you have fewer administrative hurdles to get over. So, I always talk about, I'm not a tech person. I'm definitely not the entity type of person to set up. So that's why I'm just sharing with you how I did it. And I like this part of my business to be super simple. And I don't really want the ongoing hassle and headache of an S Corp. So the cost involved in setting up and maintaining your entity can influence your decision. So if you want something simple and streamlined, you're going to go with an LLC. If you need something because of your own financial situation, or the way you've set up your taxes with your CPA, maybe you will benefit more from an S corp because there has to do with self-employment tax. So they're going to ask you like how you pay yourself, right? So on my LLC, we take a draw, right? So we have owner draws. That's how we chose to do it. Could we do a salary? Yes. There's self-employment tax works both ways. And again, I'm not the CPA, but under the S corp, if you set it up a certain way, then I believe, don't take me to the bank on this, I believe that you avoid the self-employment tax, which can be like 15%. So, but you pay yourself a salary or the shareholders. So the differences and benefits with the S corp for real estate, it can be a little bit more complex and may limit your ability to deduct losses, right? Because of the structure of the entity itself. It requires more formal procedures to maintain the corporate status. So you do have to have that annual meeting. If you have, so like even if it's just one person, you have to have like the shareholder meeting. If you have two people, you may have to issue stocks. Again, I'm not sure exactly how that would work. And you have to keep accurate meeting minutes and bylaws. So you notice in the LLC, I didn't even talk about bylaws. I do have them. They're more like a business plan for the LLC. But with that being said, having an S corp could mean additional administrative costs and really the hassle. That's what it seems like to me. Or you would have to hire someone to maintain that. Now, I'm not a bookkeeper, so if you are an investor / bookkeeper, the S corp might be the perfect thing because you already are aware of what some of the rules and taxations and things like that. For me, I just need it to be simple. So how did we decide? So in 2006, as I said before, the lending was super easy. There was a lender called Countrywide Home Loans. They were part of the debacle of the housing meltdown back in 2008 because they were just handing out loans like they were candy. And the joke was if you could breathe, you could get a loan with Countrywide Home Loans. And in fact, our first investment property, we were offered a 90-10-10. So they were going to give us 90% of the purchase price and then another 10-10, meaning that we weren't going to have to pay anything to buy that property and we were going to get money back in our pocket. So literally, I guess I did another video, or I'm doing another video about how much money do you need to invest in real estate. And I talked about, zero, like the no money down programs are very rare, but I guess that one, I could have gotten a property with no money down. We didn't go that route because even back then I wasn't very savvy, but it didn't sound like a good thing for me to do, and I'm glad I didn't take advantage of that. We did purchase it in our personal names, Nancy and Brian, so there you have it, and we ended up buying a couple more properties under our personal name. And so we didn't have a clue about, no one talked about entities to me. Remember I in one of my videos I talk about my mentor, and she had entities, but she also had a lot of money. So I guess I didn't even put two and two together about that because we just talked about how to get started in real estate investing. So I didn't know anything about entities or what that even meant, right? So I did find a real estate attorney, and my husband and I went and talked to him. And oh my goodness, he was like, first of all, he didn't have a free consult, so we were paying for his time. And after an hour, he had on a piece of paper, he had written out and drawn out this very complex, like it had all kinds of arms and boxes and things. And so I said to him, I said, well, if we went that route, how much would that be? He goes, oh, about $20,000. I was like, I'm going to have to stop you there. So we ended up not doing that. Now, in that same year, we ended up, we had not done a will yet. So I was like, okay, we're buying real estate. We have children. We probably need to have a will. We were already kind of behind the 8 ball on doing that. And we're a blended family, so we needed a will. So we ended up going to an attorney who specializes in not so much estate planning, but will planning. And then we started, but she was knowledgeable about, how to protect your assets, because our goal was we needed protection for our kids, what we were building. So we met with an estate planner / attorney, and we learned what protections we needed to preserve what we were building for our children. So in the end, we created a limited liability partnership, because it was my husband and I, after we met with an attorney that specialized in estate planning / wills. and we put in a trust and all that. And so our goal was how to protect our assets for our children. So that was our goal. So remember in the beginning, I said, what is your goal? So my goal was, and my husband's goal was, to protect what we were building for our children after we were gone. So what an LLC, LLP entity actually provides versus what it doesn't. So the way ours works is we have a limited partnership, and then our LLCs are under that, if you will. So we have like a general partner. So we actually have three entities before we even, or two entities before we even got to the LLC. So we have liability protection. And oh, let me just say this, because there's companies that you can, so I'm in Texas, but there's a couple companies that you can call up and they're online. I'm not going to name who they are, but they're I don't remember exactly what their name is, but what they do is they promise that they can build you entity where it cannot be penetrated for you to be sued. And it's usually, done in Las Vegas, well, Nevada or Wisconsin, so it makes it harder for people to find you. So trust me, if you've done something wrong or you've committed fraud, they'll find you. And it's very expensive to go that route. And the people that I've known that have done it, they don't even use half of what they were given. So you don't have to go that route. So what I'm telling you here, how we set it up, it ended up with the will and everything cost us about $2,500. So we got the will, we got the limited partnership, we got the general partnership, and then we have the LLC. So that's actually not too bad and it was all filed. We got our EIN numbers and she did all that for us. So, and again, that was probably about maybe not quite 20 years ago. So I digress though. So the reason we did it was we needed to separate our personal with our business assets, and we had to have protection, to protect what we were building if a lawsuit arose. So the tax implications is the way we created our entities, they're all pass-through income. So whatever LLC, whatever money or losses the LLC incurs, that just goes right on over to our personal income. Now, the limited partnership does file a tax return, but the individual LLCs that I was talking about, they do not. Okay, so let me rephrase that. So we have a limited partnership that it does file a tax return. We have a tax return for that. But then under that limited partnership is where we have the LLCs. Those LLCs we don't file tax returns on. And again, I'm not the CPA. That's how they're doing it. So it's not possible. We do have savings because of the expenses that we can write off because of the way we created our entities. And it's not complex in accounting. So a S Corp can be more complex. Ours is very straightforward. We do cash accrual for those that are listening that might, know bookkeeping or whatnot. And it's pretty, money in, money out. That's it. And then any loss or income, profits, they're just passed on right up to our personal tax return. And then now the thing about credit and financing. So mortgages under entities often require personal guarantees. So we have used lenders that I call them asset-based lenders. So they use the property as the collateral, and there has to be enough equity in the property for them to give me a loan. And we've been very successful in getting those properties titled under our LLC. So we've never had an issue with that or anything like that. Sometimes we have to do a personal guarantee, but most of the time they just, they're slapping a lien on the property and calling it a day. Sometimes the limits getting a mortgage on your property, if you're working with a lender that's not investor friendly, or you're trying to do a conventional mortgage, let's say we talked about house hacking earlier in the earlier video. So you're not going to be able to go in there and, with your LLC or S Corp and get a loan under an LLC. If you can, let me know in the comments, but I don't think you can for your own personal residence. So if you're trying to house hack, where you buy a property, you live in it for 2 years, you turn it into a rental, when you initially purchase it, it's going to be in your personal name. So what to consider when you have these entities, because each of them have cost, maintenance, and some are more complex than others. So the setup costs. So you can go to online, I want to say inkfile.com is one of them, but online LLC filings versus hiring an attorney. So I would say you don't necessarily need to hire an attorney unless you just totally know what you don't know what you're doing. Like when we first started, I had no clue about what an entity could do or not do. Now, after watching this video and you have a very simple setup and you just want to create an LLC for that property, boom, you can do that. You can go online here in Texas and just do it. You can file with the Secretary of State. So on an LLC, there are some reports that I have to do, franchise tax reports, but I just turn that over to my accountant. There's a registered agent. One of our LLCs, I'm the registered agent, and basically you just fill out a form saying, yes, I'm still in business in the state of Texas. But for an LLC, there's no annual state fees. The LLC itself doesn't pay taxes, and everything is passed up through my personal tax return. Yes, you could get audited. Okay, as of this, knock on my desk here, I've not been audited. But if I were, all my tax returns are up to date, and I'm using a CPA, and we do profit and losses on every single property, so everything is recorded in the tax return. As far as complexity with S corps, it's not just filing taxes, but you have to be able to show, if you've made any payments, like salary payments, if you're paying or not paying a self-employment tax. And you just want to make sure that you're separating your personal from your business income. So like in real estate, we learn, don't commingle funds. When you're in property management, don't commingle your funds with, your property management business. And, I'm going to kind of just poke the bear here about insurance. So it's not my favorite topic, but when you have rental property, you'll want to make sure that you are covered, not just for the property insurance, but you can purchase what's called an umbrella policy, and you can usually get them for I'm going to say around $400 for a year, for $1 million worth of insurance coverage, and it's like more protection. So if you were to get sued, and the cool thing about umbrella policy is you can buy it for your entire LLC, right? So it can just be so that if you did get sued, then you'd have that additional cushion, if you will, and it's very cheap money and to give you that kind of sense of assurance if you were to be sued. And you want to ensure proper title and mortgages under the entity once it's formed. So, usually a title company, will have to make sure I've had this happen where they've the name might be a little confusing, and so they spelled it wrong. So, when you're closing or you're refinancing, double check. I just had this happen on a refi last year on an entity on our limited partnership that we were doing a cash out refi on one of our properties that was in this partnership, and they got the name completely wrong. So at the closing table, guess what? I said, hey, this paperwork is wrong because we didn't have a chance to look at it. So what was on the settlement statement was correct, but what was on the deed was not. So we had to stop, and the title company, it took them like an hour to go back and fix all of that through all the documents. So you do want to make sure that when you're purchasing, that the mortgage company, the title company, all the paperwork is in the correct name of the entity that you're titling. I hope that makes sense. So creating an LLC for a partnership deal. So I've over the years, I've partnered with different people on different properties where we've, wholesaled, or we've had a marketing agreement, or we've purchased properties together, whatever. We were in business together, and, maybe for like 6 months to a year, but we both agreed to set up an LLC because it's fairly cheap to do. So like I said, here's Inc. Authority in Texas. We can actually file with the Secretary of State, go to their website, and it's once you know what forms to fill out. So usually you have to do a name search. Once you get the name search, say nobody has that name, then you fill out the paperwork. I think it's about $300 to file with the Secretary of State. Obtaining an EIN is really simple. You go to the IRS website and say, apply for a EIN, which is the employee identification number. It's like the social security number for your business, and you need that so that you can go and open a bank account. So I have done that where we've filed. We actually used Inc. Authority. I think it was Inc. File at the time, and we paid. It was about $450, I think, to set up one LLC. But here's the thing: they also got all of the, and you just fill out a form online to say who are the partners. And you can add in their caveats, like in our partnership, on different partnerships, we've had one person have 51%. I always say don't do 50-50. You know why? Because what if something happens? Somebody needs to make a decision. Or in your documents have like, okay, if this happens, here's the tiebreaker, right? If it's just two people. And then keep your finances separate from that LLC. So if you have, let's say, 3 LLCs and you have this one other LLC with a partner, you have to have a separate bank account. That's the only way it works. Do talk with an estate planner or an attorney to see what fits your personal situation. Because again, it goes back to, maybe you already have, let's say you have a window cleaning company, right? And so you have that entity structured a certain way. So you might need more protection than me, who my husband has a W-2 job. So, if we were to be sued, they're just going to come after our personal stuff, right? Where if you have another business, they might come after your business. So you have to see what fits your personal situation. And then do use insurance properly and correctly, right? So talk to someone that's in insurance that understands investment properties and how to protect the owner of the investment property. So there's landlord policies. If you are doing short-term rentals, there is a short-term rental policy. You have to make sure you have the right policy. And then make sure you get that umbrella policy that I was talking to. Anything you can do on that end to reduce your risk, whether or not you have an LLC. So let's say you're buying your first 1 or 2 properties, because in the beginning we did know and got good direction to buy the right insurance, both to protect the property and ourselves, and that's through that umbrella. And then when we ended up getting the entities, then we just made them part of that process. So the takeaways from this video is that you don't have to have your entity all figured out before you purchase an investment property. So if tomorrow, after you've watched some of my other videos, like, oh my gosh, I found a deal, I have my funding, but I don't have my entity, you can still buy that property. It's okay. You don't have to. And worst case scenario, you can always retitle the property into the entity, right? There's some things about that, and you might have to pay more money. But you know what? I would just wait. If you buy 1 or 2 properties in your personal name, it's okay. Do meet with a financial advisor or estate planner. I recommend an estate planner, because the estate planner, that's somebody that is going to look at somebody that can do a will. Okay, I guess that's kind of what I'm saying, is because what is the reason? Most people are investing in real estate to create and build a legacy for their family. I can't imagine that, people are investing in real estate and then they're like, okay, when I die, that's it. I mean, maybe you're going to leave it to charity. There's a reason that we invest in real estate, to build wealth. So I think that somebody who can look at long-term planning is who you need to see. And sometimes, I'm not saying financial advisors don't know, but if they're kind of pushing into the stock market, it's good to diversify, but that financial advisor also needs to kind of like, okay, but you want to invest in real estate, but at the end of the day, you need someone that can help you set up the entity that will protect you the best. In an LLC or any other entity is not a fail-safe for being sued. So if you are negligent or you commit fraud, you can still be sued, and you're probably, if it was proved that you were negligent or you committed fraud, chances are you're going to have to pay up something there. And then fortify your protection by getting the right insurance coverage and adding that umbrella policy, right? So having an LLC, this is what I want to leave you with today. Having an LLC shouldn't stop you from investing. It's a tool, not a prerequisite. Okay, so it's a tool, not a prerequisite. And don't get hung up like that you don't have or that you have to create an entity before you buy a property. Okay, so if you have any questions, email me at nancy@moneymakingmamas.com. Notice that there's no G in that making. And then give me a follow on Instagram at Money Making Mamas. And if you want to just book a call, that QR code goes to my calendar. And the next thing I'm going to ask you to do is I have another video here. And check it out, because I think you'll find, as I'm doing this series of real estate videos, that I'm really trying to give you the education that you need to get started, and taking away all the barriers to keep you from not investing. So, hey, thanks so much for checking in with me. Have a great day, and I'll see you soon.